You good to go?
Yep.
All right, so we're excited to have Mr. Chris Derby here. So, Chris, welcome.
Good morning, all.
So, Chris, I kind of want to talk about the whole 257 system, which is 2 years, 5 properties, and getting them paid off in 7. So you have 2 home run deals. So let's talk about your first deal that you bought, right? Where's the property and what are the numbers?
So this was a stumble upon, thank the good Lord, down in Berry Avenue, East Lakeview in Chicago, just a block from the lake. Bought that off from auction. Wasn't entirely sure as to the condition, nor were we sure as to whether or not there were some back fees owed, in other words, association fees. So fortunately on this property, and that's why it has become and it continues to be a home run deal, there were no back taxes on it. There were no delinquent association fees. We purchased that property for about $67,000, and it is worth. There was a great equity position, let's say, going into that.
So what is, you bought it for 67, right?
Yes, sir.
So what happened was the property, we basically found it as a part of our Chicago deal desk, which is Chicago deal vault, I should say, where this is a property kind of was going to auction, right? We're like, oh, it's a great location, phenomenal thing, and we knew it was a studio, right, going into it.
Yes.
We just weren't sure the condition of it.
That is true.
Fortunately, you open the property, and what happens?
You know what? We put a coat of paint on that and rented it out literally a week later. That's really all it needed. In such a great thing that the association had actually rented the apartment and had an escrow amount for the association fees, which was my concern, because those could go to several $1,000s or more. Nothing was owed on it. It was turnkey. It rented immediately. It's in a great neighborhood and continues to this day to be.
Okay. So what was the property worth? It's been about a year now that you've owned it.
You bet.
What was the property worth, or what is the property worth today? You bought it for 67, you said?
67,000.
Okay.
You know, my guesstimate, and this is estimate or whoever you want to go by. You know, the market, of course, dictates what any property's worth, but it's certainly worth in excess of $100,000. Probably closer to 115,
120. You're right.
$120,000.
Because when we had done the numbers at that time, I think we were at somewhere around 110 or so. It's been a year, and given where the market has gone today, probably I think you're pretty conservative to say about 115, 120 all day long. Right?
And that's what we do. You know, we take a conservative stance on the things that we do here, and typically we shine brighter than what we would pretend to be.
Right. So what is the cash flow on that? What kind of profit are you making on that deal?
So fortunately for this particular property, the association fees are less than $200. It's rented now for $1,000. I actually bought that as a cash property. I didn't finance. So you take the taxes out, which are in the neighborhood of $150 a month. From $1,000, so you've got the $150 plus the association fees, about $350, easily a $650 cash flow problem.
So right now you have a $650 cash flow.
Absolutely.
Currently. Now, if you were to basically, let's say you were to put a finance on it, right?
Yes.
You got a $50,000-$60,000 loan,
Yes.
which means most of your money would be out, right?
Yes.
You'd get a phenomenal return. I mean, already you're making phenomenal amount of money on the deal, but your cash flow would go through, your rate of return would go through the roof, right? And you would still make $350 to $400.
I was just going to say, you're easily $350 to $400 on positive cash flow with a full finance and completely cashing out.
Okay. So how many more of these would you like to have?
Well, you know what? I am always on the prowl and texting and hounding you constantly and trying to be vigilant myself in those types of home run deals. Okay. What a great feeling. What a great thing to have. Easy rent, easy cash flow, and continues to be.
So let's go to deal number 2, right? Deal number 2 is a little bit larger building, right?
It is.
It's a 3-flat.
It is.
Right? So this was a property that was bought. There was another property that we found, right? And basically, that's a property that you got also. So what was the purchase price on this 3-flat?
So that one we got in the neighborhood about $153 on that particular property, which of course it was substantially under market value, but on the other hand did need some work. So the equity position on that property wasn't great,
right,
if at all. But the cash flow is really something to be considered with. You've got 3 houses under one roof. It's fully functional and operational and fully rented today. I have great people in there. Has actually done quite well. And wasn't quite what I thought it was going to be in terms of rehabbing.
Right. So basically, you bought it for about 150.
Yep.
You put about 55,000 into it, right? What is your cash flow every single month?
You know, that place is pulling in about $3,500 a month and has not missed a beat since the day I started renting it out. Yep.
Okay. And so that's your net cash flow, or
no,
after
I'm sorry,
expenses?
that's gross.
Okay.
Yeah. So you got to figure the taxes in that area on that building. We've got them appealed right now, and they may come down, but you're looking at about $800 a month in taxes. So let's say it's $1,000. You're down to $2,500. You've got several $100s in. I pay the electric bill. I get some money back on. I've got a fully functional utility room in there. So the cash flow on that conservatively is $2,000 a month. And again, that's something that I paid off.
Right. So now I just have a follow-up question to this. Before this, right? Before kind of we met, before you started listening to the show, you kind of went the traditional way. You were a corporate guy, right?
I absolutely was.
Right. What did you do before that?
I was a district manager for Back to Bed and the Bedding Experts. Big job, 30 stores under my belt, drove all over the place, was out and about all day, got home late at night. It was a great job, I guess, in its own way, but it sure took up a lot of time.
So you're managing a lot of stores. You were kind of in charge.
Absolutely.
Okay. So that had worked out pretty well for you.
It did okay. It really did. I worked my way up. I worked my way up to that position.
Got it. So what my question is this. At the time, so you obviously, like most people, right, you tried to save some money, put some money aside. And what most people do is they go and try to find a financial manager, financial consultant, whatever you call, financial planner. So you went to somebody, some well-known company, right?
Very well-known company.
Yeah, Goldman Sachs, right?
Good old Goldman.
And they were investing money for you.
That's correct.
Right? Compared to what you do today, what is the difference between returns today versus returns with Goldman Sachs that you were doing?
I cringe to say, and of course it was always the fault of the market, or we're on our best behavior right now. We're doing the best we can for you. Unfortunately, and no disrespect to Goldman Sachs, but that portfolio has yet to perform in any significant way.
Right.
I have done much better on the real estate side of it. I will clearly say.
So, in all seriousness, right? If we got to know each other about a year ago, what if you had been around another 4 years ago? Where do you think you'd be in terms of your number of properties and your returns?
I could honestly say I'd probably be at 10 properties.
Easily.
And I'm a self-made guy and someone who likes to manage his own properties, and I think I could still run 10 feasibly. It does take some input. The 3 flat alone, initially getting it up and going, was demanding, but now it's on autopilot. It just runs.
I think you said it. I mean, the secret of the 257 or 210-7, depending on how you want to kind of do it, is you set it up, and once you set it, you just forget about it, right?
Wasn't that a slogan by Ron Popeil, but we maybe should not be using? Yes, we do. Right. We do. We set it, and we forget it, and again, it takes minimum maintenance, and you can't look away too long, but I must say it's been much more profitable and much more exciting for me, a lot more challenging, and I feel like I'm more in control of my destiny by doing this.
So one last follow-up question as we wrap up, Chris. What would you say to that person, right, that's driving in the car, listens to the show, and is like, oh man, this sounds good, right? Is it possible for me? I mean, do you have a, what is the secret?
It's really about following direction. So it's those who try to fly solo or maybe think they've heard the solution and the way to do this, but maybe are not fully advised. And as you and I talked about, you said, listen, Chris, don't buy a property, don't cement it until you talk to me. Let's make sure the background on it is good. Let's check and see what liens, if any, are against it, and let's do this in a sequential, mathematical, functional way, and quite frankly, you'll walk away doing well. It is absolutely doable.
So it's basically, and I think that's what we want to get across to people a lot of times is, guys, it's a system. Right?
It is a system.
Once you learn that system, when you had your corporate job, you guys over time had developed a system. When a customer walked to acquire a customer, when a customer walked in the store, what did you say? Because everybody, most of us, we are all programmed to go through a system, yet people get into real estate and they're like, oh my God, it's a great idea. And guess what? What happens is it fails for them. The reason this works is because it's a system. As long as you plug into the system, it just works for you day in and day
You
out.
have to be consistent. When a customer used to walk into my store or one of my stores and talk to an employee, the first thing I would tell them to ask them is, have you been in our store before? Similar to, have you been in real estate before?
Right.
Most of them would say no, and I would say, my God, you must be excited. Right. You couldn't have picked a better place. We know exactly how to do this, and we're going to help you get and sleep just the way you deserve to be. And that's what I did with you.
Right. No,
I followed direction.
I mean, you clearly have done that before, and you basically came in and you followed direction and you fit into that system. You learned
Absolutely.
that system and duplicated it. So, having said that, Chris, congratulations
Thank
on
you,
your two
Andrew.
successes, and look forward to doing a bunch more with you.
I'm so excited I can barely contain myself.
Great. Thank you so much, bud.
Chicago Flipping with Andrew Holmes will return next Sunday at 12 noon. For information or questions about content of this show or to speak to Andrew, call 844-MONEY-55 or visit ChicagoCashflow.com to learn about upcoming seminars. That's 844-666-3955. And be sure to tune in next week.